Let's also now welcome in Punita Kumar Sinha, who's joining us, this morning. Punita, good to have you with us, particularly at a time when everyone's feeling positive with all the festive cheer currently. Just to get a perspective from you, Punita, on where you feel we stand right now, given the overall context, global markets are also looking good at this point. We seem to be poised for a new threshold of gains. What's your perspective?
So I think you're right. I think there's generally the risk aversion has reduced and people are willing to take more bets on risky stocks. And the reasons are twofold. One, we are seeing that the US-China deal, which has been one of the big negatives in the markets, is coming to some kind of a resolution. Now, of course, if that doesn't happen, then of course, again, we might see markets react negatively. But at the moment, it seems that President Trump is trying to come up with some resolution along with the Chinese. The second one is that the Brexit deal, there's a bit more optimism that that might come through as well. So while growth fears are there in global economies, I think these two negative factors could be removed from the markets, and therefore we are seeing people willing to take on more risk in buying stocks.
Do you think the current risk-reward ratio is favorable, or markets have a long way to go before realities of fundamentals they haunt us?
No, I think we are going to see volatility, because when things recover, it's not all one way. You do start seeing hiccups, you see some negative news along the way. So while I think the trend is probably upwards for markets, is going to be accompanied with volatility. I think even in India, we are seeing, while the growth fears are much more prevalent in India as compared to other markets. I mean, US has had very buoyant growth. I think India's obviously the growth is still struggling. But we are beginning to see signs of improvement, and the government is actually putting in a lot of measures to stimulate the economy. So while we are not out of the woods yet here in India, we could still have some more delinquencies, some more companies going into IBC, etc. I think the worst might be over.
So, Punita, what kind of market are we staring at that? Because last couple of quarters, if you bought those 8, 10, 15 stocks, you pretty much have managed to outperform the market very smartly and very handsomely. Now, we may argue and say, okay, Nestle महंगा है 100 का P, D-Mart 70 P, Bajaj Finance 8 times book. But sitting or sticking to these classics have made money. What would you do as a portfolio manager? Stick to these classics or time to buy risk?
I think it's time to buy some risk. I wouldn't call it risk necessarily. There's a lot of, I would say, value. Value will get rewarded when there's a recovery. And what we've seen globally already is that value and cyclical stocks have started performing better than the high-priced defensives or what you might even call some growth stocks. Whereas in India, we've not seen that rotation. We've seen just the defensives, very high quality names, getting just more expensive. So I think at some point there will be a shift to value even in India. And that doesn't mean necessarily that you're taking on more risk in terms of going into poor companies. You can still find good companies with quality management and good governance, but they're just being neglected, and they tend to be largely in the mid and small cap space. But of course I want to caveat this is all predicated the fact that economy is going to be strongly recovering, and there are not going to be any more sort of unexpected crises coming out of nowhere.
Punita, morning. Just wanted to talk about how you're looking at the overall tax rates now in India, and thereby, the flows in terms of liquidity. for particularly from FPIs. What is the sense that you're getting as to how now this news has been digested and how we're comparing our tax rates vis-a-vis the rest of the world?
So definitely, I think the corporate tax rate cut has been a positive sentiment provider. But when I talk to companies, a lot of companies already are paying effective tax rates that are lower than the existing tax rate, so they may not shift to the new regime. So not all companies will benefit. So one has to actually carefully study various companies and their already effective tax rates and see which companies are likely to benefit. But of course, for new manufacturing, there is a positive move, and so we might see capex pick up. We are hoping that banks will start lending. The results from ICICI and SBI were somewhat encouraging. The NBFC space is still not out of the woods, but definitely we think that there may be some capex coming up. Now, you know, this whole slowdown that everyone is talking about, while there is definitely a slowdown, there is definitely demand that is under pressure. So the tax rate will stimulate the supply side, but the demand side is still weak, and we want to make sure that the demand recovery is happening strongly.
Punita, what do you make of the aggressive divestment plan that's been initiated? We're yet to, of course, see it play out, but in terms of the kind of appetite you see for some of these mega issues?
See, I've been a little jaded in the last 25 years of looking at Indian markets and having invested in some of these PSU companies that have been government divestment sales, and never really had made much money or any money in many of those. So I think most foreign investors probably have the same kind of experience, that they haven't made money in government divestment sales. And also, when there's so much supply of paper, that is a risk for our markets overall. If the markets can even absorb so much supply of paper. So while we are seeing markets recover somewhat, and growth probably also recovering or hopefully going to recover, if we have too much supply of paper, that might dampen the markets. So I think while it's good for government's fiscal deficit to do these divestments, if they don't do them more in a strategic way and push all of it through the stock markets, that may not have the intended result, at least for investors.
Give me a flavor of your portfolio, Punita. I mean, where have you been buying? What are your commitment levels? Are you sitting on cash levels which are higher than what historically you've maintained? I just want to understand that what is your assessment of risk versus reward in the near term?
Well, definitely have more cash than in the past, but slowly adding back to the markets. And in the markets also, one is being very stock specific. There's no like real one theme. Of course, financial still is a place that one is finding a lot of ideas. There are other consumer discretionary, other names as well, that one is able to find, but one has to be very specific in terms of your stock selection. It's not like you're going to see a whole sector just rallying. That's not what I'm seeing right now.
More flavor of consumer discretionary, because it's a large definition, starts with autos, goes all the way up to air conditioners and even white goods. Which end of the discretionary market you're bullish on?
I think more, I would say, the financing. For instance, in autos, I'm looking more at the auto finance companies. In terms of, then there is, the likes of the certain companies that you can find in terms of the media, not like channels, broadcasters, but in terms of like cinemas. We own PVR, and we've been owning that for several years. So there are pockets of opportunities that you can find. And it's not, what I'm trying to say, it's not just that you need to be in just the defensive consumer staples names. You can also start looking for opportunities, as you said, in consumer durables selectively. I think home finance is an area as well that I would call somewhat discretionary, but that's an area that also seems to be improving as well.
We've seen a bull run in insurance, and that's both life insurance and general insurance. All insurance companies have a different model. Some are ULIP, some are agency based, some are dominated by the branches. But all insurance stocks have rallied in tandem with each other without differentiating. Is there more money to be made in insurance?
I think insurance is a long-term theme. That's a great theme to be in for a country like India, where we are so under-penetrated in insurance, that I think that's a long-term theme. And when equity markets do well, then given the way we are structured in India in terms of the insurance companies, they also benefit from that as well. So I think insurance is a long-term theme, and there are a lot of quality companies with good governance and good parentage that one can think of. But of course, one has to be careful on valuations.
Okay.
Punita, if I may deviate and talk a little bit about what you're expecting from the Fed. You know, we're looking at a rate cut this time around, but a lot of economists as well are of the view that now the reasons, or the more compelling reasons for a rate cut are less pressing at a time like this. What is your expectation as to what the Fed could potentially do, and how as well you're looking at the fact that the trade war fears to a certain extent have calmed down between the US and China?
So as I said, actually, first of all, I think definitely we are heading into an election in the US in the next 12 months. And typically in those kinds of situations, one generally sees a healthy equity market backdrop because no president wants to rock the boat too much before the election. And which is why we are seeing that the US-China trade might get to some resolution. And you're right, while everyone's talking about growth fears, when I'm in the US, I don't feel the growth slow down there at all compared to what one feels in countries like India or in the emerging economies. You don't feel the growth slow down at all. So the reason for a rate cut doesn't seem to be as strong. We are at full employment in the US. The economy is still doing really well. The only sector that's showing some pockets of weakness now is the real estate, where housing has started to come off a little bit. But the valuations in the US markets are not great. So I think while the economy is still doing well, there is a shift out of US equity markets into, see if the Brexit deal gets resolved, into European markets, into emerging markets, where there's a lot more value. And if there's any growth, recovery and further monetary easing, the benefits of that will be felt a lot more in the other markets, not so much the US. So to your question on the Fed rate cut, I agree. I don't see there'll be a huge benefit to the US economy, but it might just create positive sentiment for the other markets.
Sure. So, Punita, in that scenario, then, what is the kind of outlook you have, let's say, for the upcoming year in terms of potential returns or potential upside that you foresee, given these factors at play?
See, I don't think there's going to be one big linear run. As I said earlier, there is going to be volatility because there are still risks in the economy. The growth is still not robust. We are just seeing signs of recovery. In fact, as when I speak to a lot of the companies that I've invested in or I'm on the boards of, the sense I get is that they're all seeing green shoots, but it's not like we are seeing flowers blooming all around. So there are green shoots, and in a situation like that, you do have hiccups, you do have ups and downs. So one has to still be very quality focused and when I say quality, I don't mean like just defensives. I mean just companies which have good management and good governance and good processes. It's just that they may be not in the right sector, or they've just been neglected because of the market cap or for whatever reason. But having said that, when I look at what global investors are thinking, I don't think India is really on their radar in a big way right now. Most of them are looking to China potentially, because that's where the biggest risk was. In India, most people are already, those who know India well are already somewhat overweighted. But if you look at from the sell side perspective, I don't see too many houses having put out a buy call on India from a global portfolio perspective. Most of the buy calls are going towards either China or other emerging markets or European markets. So India is fairly seen, pretty much in the neutral category right now. It's what's going to really keep the markets buoyant is going to be more the domestic flows, and the foreign flows will follow, but I don't see them coming in a big way right now.
Punita, thank you so much for taking time out and joining in, giving us your flavor of all that's going on across the globe as well as back home and how India is shaping up vis-a-vis the other markets.